Hi and welcome to the Dow Market View for Thursday the 25th of September 2014. And starting off with the 5-minute chart, we can see a big move back to the upside yesterday, which I spoke of in yesterday's Market View. In fact, let me just switch to the daily chart so you can see the overall move for yesterday. You can see this big bar moving back up to the upside to the 76% that we drew in yesterday as a stopping point, and that's precisely where the market traded to yesterday. What was interesting, just going back to the 5-minute chart, is that the signal appeared bang on the release of the high impact economic news of building new home sales, actually not building permits, new home sales at 3 p.m. So this signal is invalid. But what does it show us down here outside of the PTP? And unfortunately we don't have any other. However, once the videos are recorded and I show you actually to read bar by bar, you will see from this price action around here that we have a lot of buying in the market. And this isn't just at the open's over here. So we see the buying, the selling coming into the market, and we get this big spike here first where the support comes in at the 17,050, so a big round number, a BRN there. Then we have the economic news coming out, and we see even more buying in this bar. We've got some selling that follows, but the BRN holds. Then we have a test bar, followed by a drop-off in volume, followed by a retest. And what's important here is that the low of this bar is lower than this bar, and the volume is lower, which means that the selling that was seen here has now disappeared. And again, we're back above the 17,050 psychological big round number level there. And this leaves the market then free to move to the upside. We see a bit of potential weakness there at the daily pivot. The market's driving through the 17,100 level, which is just here. And we see an increase in volume compared to the previous bar, but it's not highlighted green. Irrespective of that, there is an increase in volume driving through the next round number. The market then trades up to the next round number where we see some potential weakness. This is incredibly predictable within the Dow or any other market, really, because once you understand how the market drives and what's behind driving prices, you can actually read it like reading a novel. So we've got some selling coming into the market at this psychological level, and look how the market holds at this psychological level, plus also the R1 level there. We get these other potential weaknesses here, but the market fails to close below these, and then we see the markets coming through the 17,100 and the resistance 1 level there. And then we see an increase in volume here, which is just there, and the market then continuing higher. A bit of a lull here. You can see low volume, no selling around, even though there's some potential weakness. And then the market drives through the 17,150, and we see the market then trading up towards the end of the session, and then prices just petering out and trading sideways. So from one economic news item yesterday was enough to propel the market. Plus, of course, we've got the warmongering going on behind the scenes as well with Obama. So this is supports a market, unfortunately, because it means that somebody like Dick Cheney and Rumsfeld, who are directors of Halliburton, making a few quid out of other people's misery. So no surprise to see the stock market moving higher as well, with that in the background at the moment. So in the daily chart, you see this market trading up to the 76% that we drew in yesterday. The next upside target is 17,277. We're going to go back to the all-time high, in my opinion, because, as I said yesterday, this is the biggest Ponzi scheme that is around at the moment. The market's moving higher on absolutely nothing overall. And 17,361 is the all-time high, so expect the market to move higher there. In the economic news front, we've got unemployment claims. Everything's out before the Dow opens today. unemployment claims, core durable goods orders, and Bank of England Governor Carney is going to speak at 1:40. He should have finished his indecision speech, because that's all they are, at around, I would have thought, 2:15 at the latest. So Carney will be saying one thing, doing another at 1:40, so keep that in mind as well. Just before we move on, I just want to have a quick look at the Dow implied. Now, for you, those of you that are beta testing the Pinpoint Trader charts for the Dow will be unaware of this, but I did record a video a few months ago with regards to using the implied volatility to gauge a market's top. You can find this video, and I will include the link in today's mail. You can find it by typing in ToughXP Next Gen implied volatility. If I can find the keys on the keyboard, let's just try again. So if you type this in and then click search, it will bring up this video that I recorded back in June. It's about how implied volatility works within the Dow Jones and how it is a precursor to what the market is likely to do in the bigger scheme of things. So for those of you that have been following me for the last 12 months with the implied volatility since June, let's just have a quick look at this. So if you're not familiar with this, then have a look at the video, and then you will see why we actually use this to see what's going on in the background of the Dow. So yesterday, the implied volatility dropping down to 9.74. And again, you can see the historical volatility just kicking up a bit there, down at the all-time lows. So a big drop off yesterday in the implied volatility, so we can expect higher prices at the moment, but the market's certainly setting itself up for another correction in due course here. Right, well, that's it from me. I will see you in tomorrow's market review. It'll be Fridays already. And all things being equal, see you then. As ever, thank you for your support, very much appreciated, and as ever, thanks for watching.